Welcome to our show. It's just a quick show that we do. We call it the closing beat, just to kind of cover the stock market, all the good stuff there. We'll go over all of that for you today. We're financial advisors here at Jazz Wealth, so of course, if you have any questions or something comes up along the way, you're welcome to ask. I generally do the questions at the end there once we have everything sort of wrapped up and done for the week. We're also playing a game. It's called Guess the Dow, and today we're announcing the winner. Each week we announce a winner. You can guess on the website there on the bottom right-hand corner of your page. You just go tell me where you think the Dow will close next week. And if you're the closest without going over, we'll send you a $100 gift card like Mr. Ron Arnold. Ron Arnold was the closest without going over with the Dow today. He guessed 2, 6, 8, 11, and 17. So 2, 6, 8, 11.17. He's our winner. Congratulations, Ron. We'll be in contact to get your address so we can send you out the gift card. It's not like a marketing thing. Like we don't, you'll find that we don't email you or spam you or anything. Just if you guess, we'll email you. If you don't, we won't bother you. So that's that. Did a little research. 70.5% of the guesses were higher than Mr. Ron there. So a lot of people actually feeling like the markets would finish just a touch higher than where they were. The average guess was 26779.38. Very close to where Ron landed there. Median guess 27098.54. So you could play for next week if you guessed before tomorrow at like lunchtime. It's like 12 or 1 o'clock Eastern. I can't remember. But you can play if you like. Just go to the website there, jazzwealth.com/guess the Dow. And we'll take it from there. So that's what you have there. Also posted a video earlier today on the Dave Ramsey funds just to get things started, see what you guys think. If there is maybe something you like about it or don't like, leave a comment. I'll go back and look at all the comments there, see where we can improve on that, see if we can even make it better. I already thought of something, by the way, so we'll expand on it in the future. We don't need to save Dave Ramsey every time. I'm not trying to like make money off of him or anything, but we'll find a way to improve on it. I've already got an idea that we'll focus on there, or if you have ideas for other videos where data would be really important, we now have access to every bit of data on the planet ever. So we could dig through it there, as you'll see in that Dave Ramsey video that we posted earlier today. We also did class last night on Social Security for our customers. We do one every week for our customers. That's enough marketing. Let's get started. It's Friday. You got better things to do. The Dow lost 70 points on the day. The S&P lost 15. NASDAQ lost 91. Did you hear what they did? Apparently there were talks. I don't know that the talks were today. It said that there were talks of finding ways to limit investors here to invest in China, whether it be through the index funds, whether it be through individual stocks. There were even considerations of, apparently even talks of delisting Chinese companies like Alibaba, JD, things like that, Baidu. So you saw those take a big hit today. We'll get to that in just a second. But that's basically what moved the markets. Early mid-morning there, I guess, got things going. And so the markets never really recovered officially from that point. A little bounce off lows towards the end of the day. But nonetheless, we finished lower on the day, so that's basically it. We had some econ numbers come out. Personal spending was higher, personal income was higher, but consumer spending wasn't as high as expected. So there's a little concern there because consumer spending represents like 2/3 of our total economy. So we need you guys out there spending money, buying stuff. I got 2 chairs today. I was really excited. 2 chairs for our new studio we're building here. So I did my part. What are you guys buying? Go out and buy stuff. The issue was and remains, people are spending less in hotels and restaurants, and they're still spending on cars and RVs and things like that, but starting to see a little bit of that discretionary spending pull back a little bit. So that's that one. Now the argument there is, hey, unemployment. Well, it's like record lows, right? Why shouldn't people be out there spending money? Maybe we're done spending money. We just kind of ran out for a while. The argument is, well, if people are already starting to slow down, you've got this upcoming tariff issue where those tariffs are going to be placed on a lot of consumer-based products in just a few days, I believe. And so that's a concern there as well. Also, the PCE index that people look at, well, not people, the Fed really likes to look at there, that upticked a little bit as well. So helpful for the Fed. They're shooting for target inflation around 2%. 1.8 is where it stands now, if you care. I don't know if that's so interesting. I mean, I look at it. I'm just testing things, see what you guys like there. So that's that. Let's go over some charts. Look and see what the markets did today. Here's the S&P 500. We really made no progress this week. We were sitting last week in a choppy range. This week we just pulled back a little bit. Nothing crazy, nothing dramatic. I saw a comment from somebody a couple days ago that said the market crashed. I hope you don't think that's a crash. You're in for a big shock if you think that's the crash. But nonetheless, just a small little pullback on the week, still above the 50-day moving average, which is important because we have a lot of stocks hovering around that blue line, which is the 50-day moving average. The S&P did push through it today, but was able to close back above. If you like following the Dow, you got basically the same picture there. It's almost identical. And if you like looking at the NASDAQ, it's a little bit weaker under the 50-day moving average there in the short term. If we go through some of the sectors here today, because of those comments about the possibility of delisting Chinese companies and limiting our investment exposure over there, well, that hurt the trade-sensitive names. You got semiconductors a little bit lower on the day by about 2.33%. Now, to be fair, some of this was because of Micron. So the semiconductors were already lower on the day because of Micron and a couple others we'll go over in a second. But the trade news, of course, hurt them in that respect there. So semiconductors sort of leading the way. We'll do it real quick here. Micron was lower on the day by 10%. Oh, 11 by the end of the, yeah. So 11% on the earnings. We covered the earnings yesterday, so Micron taking a bit of a hit there. Earnings beat, revenue beat, guidance was the disappointment, and inventories was a disappointment. Now, anytime you see that on Micron or some of these larger tech semiconductor companies, someone's supplying them the parts. They don't make everything there. So on Micron, the suppliers are Lam Research, I believe, still. Oh, yeah. 5.25% there, and Applied Materials still in the same camp. They're suppliers of Micron. So those took a little bit bigger of a hit. Micron makes up about 4% of the SMH, so that put a little bit of extra weight on this sector for the day. And, it's what it is. Let's talk about something good here. The financials bucked the trend just a little bit, if that's any kind of... I need bigger words. Do you think I need bigger words? I'm always talking like so basic. Maybe I should step it up. All right, so we got 0.4% gain for the financials today. Now, some of that was going to be help from Wells Fargo. Did you see Wells Fargo got a new CEO? Stock was higher by 3.7% on the day. The CEO is basically a Wall Street guy. Remember Warren Buffett said a while back when Wells Fargo was going through this that they should not hire within, and they probably shouldn't even hire within Wall Street. They should hire outside of Wall Street to help start projecting a better image and how they're going to fix everything, and they're a great company, and don't worry about us. So anyways, they hired a guy, comes from Bank of New York Mellon, but I remember him from Visa. He was the CEO of Visa for a while. So that's kind of outside, while still having someone that knows what to do. So we'll see. I also read that he's going to stay in New York. Wells Fargo's in San Francisco. That should be part of the deal. Pack your stuff up, go to Wells Fargo, let's get some work done. But I guess he's going to stay in New York for the time being. So financials, that's the short story there. Financials held their own today. That's good to see. You got regional banks holding their own a little bit as well, about a 0.5% gain on the day. I saw a couple names in the mix. SunTrust made new highs. That'll be on our new high list today, but that's a regional bank in that space. I believe BB&T made new highs as well. Yep, BB&T made new highs. So up 1% there. That's some of those regional banks that make up the KRE. Careful though, KRE is not a market cap weighted ETF. It is an equal weight, or they call it modified equal weight ETF. So these two names only make up 4%. In fact, a lot of the majority of the holdings make up about 2%. So if you happen to care, take a look at that. Bonds were a little mixed on the day. Didn't really get anything done. Long term, short term. Here's the 10-year. Pretty much flat. Not a whole lot happened there. Rates pulled back just a little bit. You can see it on the scroller above. Communication services, we covered this yesterday, the weakness there in the communication services, or XLC. You can't see it, I'm sorry. Well, okay, I'll fix that. So the XLC, a little bit lower on the day, and we said, hey, anytime, just pretty much look at Facebook. If Facebook was lower, that's dragging down the sector. It's unfortunately heavily weighted towards Facebook, 18-point-something%. Facebook lower again, antitrust issues, also Alphabet. We can't leave them out, I guess. Alphabet a little weaker on the day, same antitrust issues that we talked about yesterday. People just saying, okay, let's take a little risk off here and see what happens, if this is just going to blow over or not. Gold, a little bit lower on the day. Kind of a wild week for gold, right? A little blast off to start the week over here, and then just basically retreated to back before where it started. So a little bit lower on the day. Still above the 50-day moving average. That's going to be a focus there for gold going forward. Silver, now that was wild. Silver starting with a massive move to start there, and everybody recognizing they wanted to take profits. So wow, just a great little pullback. Let's see if we can go back, because that was like a 4% day on Monday. So from highs to today, where'd we land? about 6% lower, almost 7% lower on the week. That's pretty volatile for the price of silver. So impressive there. If you're playing along and you happen to chase that, maybe it's not impressive, but wild week for silver. Oil staying above the 200-day moving average, trying so desperately to hold on to this support here. You can see every time it sells off, you have all the technical traders saying, well, this is support. I guess I'll buy some here. If I could buy a little lower, that's great. We're still on support. If you've been doing that this week, you're down 3.8% because the price of oil is down 3.8% this week in a pretty volatile week. A lot of back and forth there. I know it doesn't look like it, but this trading throughout the day, that's a large range for that, even just the last 3 days there. If you're not familiar with candlesticks, we, of course, have classes in the dojo you can check out. If you're one of our customers, it's just search candlesticks. There's 3 of them in there just to kind of help. There's no magic behind them or anything, just to help you understand what we're looking at here. Let's cover some of the Chinese names. Do you like Alibaba? Well, if you like Alibaba at a discount, it's starting that for you. 5.1% lower today. I looked at just a handful of them, JD.com. It doesn't matter which ones you look at. Baidu, if you want to look over there, YY.com, same thing. No matter where you look. Down 6.66% on YY. Also, volatility was down 6.66% as well. There you go. It just went by. So a couple negative omens there for your trader. What else do we have? Vail Resorts. This is MTN is the ticker symbol. Not bad, actually. I mean, the stock was higher by 3%. Earnings, earnings beat, but they still lost money. We were expecting them to lose money. They just lost less than expected, so that's good. And they had positive comments about upcoming season. They sell, I guess, I wouldn't know. I'm from Florida. I don't even pretend to understand this. But apparently they pre-sell the lift tickets and season passes and things, and apparently there's been a strong uptick in that in anticipation of a busy snow season. That's awesome. I would love to go skiing. I keep picking on my daughter. Let's go skiing this winter, but I mean, I don't know. I come back all broken. We'll see. Ulta Beauty, higher by 3.4%. Remember the other day, Kramer said this was within 12% of the lows. Today, investors a little bit excited because the CEO bought $302,000 worth of shares. Don't hold me to that. 1,400 shares, somewhere in there. The CEO, so she likes discounts. Good for her. See what she does? Follow the people that have more money than you. Why are they buying? She believes in her company now, and she likes the discount. She didn't want to buy up there, so she had the chance up there, and she's like, nah, let me buy down here. So she got 308,000 or something shares. Impressive. So that's not, I'm not telling you to buy it, I'm just saying she did. 59.6% of the S&P still above the 50-day moving average, and the S&P itself, by the way. We were at 65.3 yesterday, 67.3 the day before, and we talked about why it's so volatile this week, because a lot of those stocks are right around the 50-day moving average. And today, with even just a little down day, you see all those names that were close, just pulling back a little bit, making our list go down to 59.6 rather quickly. We went from 70% early in the week to 59.6. That's a big move, but a lot of people would look at that and go, oh no. Well, if you dig deeper, you can actually see, no, it's just a lot of undecided stocks at the moment. We had 9 new 52-week highs, and believe it or not, most of them were not in the utility space today. We had mostly in the financial/real estate space. You had 3 REITs, BB&T and SunTrust, like we talked about already. And in the REIT category, only Kimco was the one to finish near highs. You had a problem today where a lot of stocks that made 52-week highs pulled back and either finished red on the day or gave back most of those gains. Kimco was the only one to finish near the highs. For 52-week lows, you got people continuing to take money out of Fox Corp. A little focus there. It kind of creeped in the news a little bit, the Fox-Disney deal and concerns about that. There's a lot of competition. CBS also just poked to new 52-week lows, but nothing major there, just a little pop down there. Did I say that there were 6 of them already? 6 new lows on the week. Regeneron Pharmaceuticals also breaking a new lows just by a little bit there, looking super weak in the short term. Netflix is our stats trade here that we're following. It didn't do a single thing today, man. It's like it won't make anything happen. We got one more day for this thing to have basically a 2% day. All in all, if you look at the technical pattern, it's still very much solid, people trying to buy the dip. But after the comments today, or what the trade talk stuff that came out today, you had that immediate surge lower in the market, and then everybody went home. That's basically what happened. Day traders stayed around. You saw the short covering at the end of the day. But at the end of that comment, 11 o'clock or so Eastern, You have everybody go, forget it. It's Friday. Take a little money off the table. I'm leaving for the day. You know, that's the kind of mentality on the street. And so no real excitement to go buy growth stock. Well, no excitement to buy tech stocks or to take any real risk into the weekend. So we will follow up and see what happens on Monday. That'll be our last day. Peloton lost another 2%. Bloomberg says it was the third worst debut in a decade for these unicorn IPOs. Remember, the company brings in $1 billion and they lose $200 million. So the way the media will portray it is high growth, high losses companies, right? So like WeWork and Uber, things like that. Companies that are growing so fast, but they have large and mounting losses, the idea is that if they could just keep that growth pace, they'll eventually be profitable, they'll have more business they know what to do with, they could scale back and all that great stuff. Well, that's becoming a concern here because, well, are we reaching that point of the economic cycle where growth is going to start slowing down? Numbers are coming out little by little. So Peloton, unfortunately, taking a bit of a hit there. I don't know much else about the company. I don't have one. I don't see a need to it. My wife's friend has one, and I don't get it. I don't get it. We have a gym, so you just use the gym. Just put the music on. Well, anyways. So let's move on. Beyond Meat's just pulling back a little bit today after yesterday's excitement. Remember, McDonald's is going to do the PLT, plant lettuce and tomato test in Canada, like 28 stores for 12 weeks or something. And so that's that one. And in the S&P 500, if you like building your own or you need to make an adjustment here, you got a couple days to do this. Nectar Therapeutics, this poor stock, by the way. So they're being kicked out of the S&P 500. Las Vegas Sands is going to take their place. The NKTR, people say to me all the time, like, why does the stock market continuously trend higher? It's because they cut their losses. This NKTR, if I could zoom out, March of last year is when they joined the S&P 500. Now, look at this. You got a sharp run up, bam, 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 right? February, March 18th is actually when they joined. There it is, right there. This is every candlestick is a weekly time period. They literally picked the top on Nectar. That's unfortunate. Anyways, sells off, loses $2 billion in market cap all in one day because of the earnings there. They have 4 losing quarters in a row. Because of that, the market cap going under $4 billion and losing 4 weeks in a row, 4 earning cycles in a row, they're kicked out, right? You can't be a part of the S&P. That's part of the minimum requirements there, so they're moving on. What else do we have for you? Cardinal Health paying out 40 cents in dividends. I think I've covered it. You guys have heard enough today, right? Let's see if we can answer some questions and call it a week. I love it. Big words hurting my brain. Yeah, I'm just so used to my previous life was I taught a lot of Chinese-based investors how to invest in the U.S. stock market. So we had to address the language barrier first by simplifying the communication, but we also had to realize they were beginners. They didn't know the U.S. market. So I'm so used to talking and actually like teaching while I talk rather than just blurt out everything and move on. And I get that some people probably watch this and go, this guy just barely knows what he's talking about. It's that mindset. I'm just so used to teaching the little things as we go. So I don't know, hopefully it's helpful. Real estate looks like a great investment is the comment there. Not a suggestion from me. Disney stock has been slammed. Yeah, I mean, people are trying to figure out those numbers, right? With the new acquisition there, Fox and everything, Disney Plus and everything. I think it'll be fine. I like the discount that it's actually pulling back. I think it's probably got another couple dollars to go, to be honest. And if the market has a week day or two in there, we've already seen that Disney will play along. So there'd be no shock if the markets fall a little and Disney falls. Yeah. Baozun, where does that fall into play? In the same thing. Yeah, falls right into the mix there. Yeah, they were down 3% today. You know, it's tough because you also have like MSCI. Oops, I typed it wrong. MSCI in the mix. The question is, can you really ban them from like international funds? Because think about what this means. If they wanted to restrict U.S. investors from investing in China, that would mean ETFs as well, like world ETFs, international ETFs. They would have to pluck just China out of their mix. Would it still be an attractive ETF? Would you want to buy that? Is that even allowed, right? Because think about they have an obligation to put it in this ETF. They'd have to change, it'd have to be a whole new ETF. So it's just like beyond what I can comprehend. I just don't see how they'd be able to do it without eliminating a lot of our choices. And hopefully it was just talk and a little bit of something to push the negotiators when they come over so that they know we're still trying to be tough. I don't know. We'll see what happens. All guess and speculation at this point. Tandra's got the right idea. We have no catalyst. Everybody's waiting for this trade talk. Everybody's waiting for earnings season. We don't have a Fed announcement coming anytime soon. So we're floating around just working our way through the day-by-day headlines, which cause a little volatility, or the push and pull as she's described there. And so you're right. Like, what moves the market if nobody's spooked or excited for the moment? It could just be a little bit of quiet. Now we have the end of the quarter, which would be Monday, be the last day. So maybe a little volume and action on that one starting the final quarter of the year. But yeah, you got a good point. Amazon scooping to 1700 or 1700. You want to scoop up a little bit. The obvious support's down there at 1675 area if it happens to get there. Looks like to me Amazon is just getting started. You got a little bit of a rollover plus the volume's getting heavier. So you have more and more people getting concerned or taking profits or whatever they're doing, but you have more and more sellers day by day as the stock bleeds a little bit lower. You don't like to see that. It's okay if a stock falls on lower volume, close to support, things like that if you're a technical trader, but you don't like to see that it's trailing off and the volume's picking up. That's tough. End of the quarter next week, you expect window dress. You have that. That's definitely something that does happen, but you don't expect there to be major decisions to happen on Monday, right? Because think about what's happened. You got everything sort of sloshing around. There's nobody that has too big or too little of a gain, too big of a loss, too little of a gain to do a whole lot of window dressing. So while that does exist and it is a part of the normal cycle, I don't see it being a big day. Really, I mean, higher volume for sure, but I wouldn't worry. Headed to the dojo to catch up on the last couple weeks. Awesome, I love it. I love it. Thoughts on Starbucks? You like 84 as a price target? There's a detailed question there. I like it. So when you say $84 as a target, did you say short? Oh, maybe you're saying you want to buy it if it falls down to 84. Yeah, I like it. You got a ways to go, and with the daily sort of volatility on that one, ideally you'd love to see it happen quickly. Maybe it does happen quickly, but otherwise, that's one where I'd say, okay, I like that area. Let me just set an alert, have a text come to my phone or something when it gets close to that area, because you could be waiting a little bit. Thoughts on AMD? I don't know how to answer that one there. Do you own it? So we got to get better at the questions. Help me give you better advice. I can't say that. Help me give you a better look at something by being a little specific about what you're looking for. What would happen if Elizabeth Warren is Democratic nominee? I mean, if she's the nominee, big deal. I don't know what would happen. I don't think, and you can tell Wall Street doesn't like her very much. So, I've read some of the comments from some of the Wall Street groups out there just saying they would basically just not support anybody. But there's a lot of back and forth. We're getting into that time. There's a lot of opinion. So just got to let it play out, see what happens. Who knows? One of the other 55 could kind of creep up from out of nowhere and have a good debate or have a good press release or something and grab the headlines and see. Everybody's waiting for that 10% pullback, so I guess it may not happen this year. Because everybody's waiting, you think it may not happen? Oh, I see what you're saying. Because everybody's, if everybody's waiting, then maybe it doesn't happen. Last couple months last few days, red days. Well, typically they do. Did a study on this 2 years ago to sort of highlight the volatility between down days and up days. Over a couple different stocks and over the market in general. It's very common. This just goes back to the saying, the bulls take the stairs and bears take the elevator. Very normal. More fear on the downside. It's harder to get as excited as you can get fearful, right? So it's just a silly way to look at it. You got a CBS and your stock. Oh, so you have CBS. You've lost 10% on it, or you're down 10% at the moment. Trying to buy into it, get more close to zero. Is that stock a Roach Motel. So here's the thing. If you're asking the question and you're like, I'm down 10%, that's close to maybe where I want to call it quits, don't do anything, right? Don't add to it there and cause more stress on yourself. Let it bounce a little bit and pull back and see if other people buy that pullback. That's the best sort of scenario. I wouldn't just randomly buy and hope that it makes a bottom. Absolutely not. Can they delist Chinese companies? I don't even know if they can, right? Because you'd be asking the exchanges to break their contracts. I don't know. I'm just guessing on that one, but I don't see how they then don't get sued, the exchanges and the government. I don't know. Oh, you really like that FedEx, don't you? So FedEx was pretty calm. Remember, when the first sell-off that it had there, that first sell-off was not extended. This doesn't represent like an extended sell-off there. So there's no reason that people need to get excited to buy it. Imagine, think about it, if you're a short-term trader or even an investor and you're like, all right, maybe I'll just try a little bit here. Well, what's the reward? The risk is it breaks lows and there's a whole all-out panic. It falls back to $100. The reward is that it just bounces a little bit. Best case scenario back to these highs. When people look at something like that, they're like, I don't know. There's a lot of risk for a very little reward. And so you see that volume taper off and you see people not willing to make a decision there. I think it's a wait and see, to be honest in here. Yeah, you like that it didn't really fall today and it held its own. I like that. But I don't need to, like I said before, I don't need to be the one that buys and tries to pick the bottom. That's a dangerous one there. Yep. Do you think Square is trading at a discount? Yeah, the problem is the same concept. What's the reward? Are you just hoping for a short-term trade? Are you trying to buy into this thing and hang on for a while? What's the reward when you look at it? You're buying a downtrend there, and if it does bounce, make a few dollars before it starts to stall out again. Kind of feels a little tough. I love it. I love it. Josh spending too much, man. I'm sorry. So can you explain how the share buybacks have affected earnings this year? Would you be anticipated for next year's earnings because you're purchasing stocks? No, you can actually start to see it quarter over quarter. So companies that are beating on earnings, we have to dig a little bit deeper. You actually see it when they talk about it on Bloomberg and CNBC. They'll say beat on earnings, beat on revenue, and then they'll move on to the real nuts and bolts of it. Because we all know most people are buying back their shares. They're going to beat on earnings unless analysts very quickly raise their estimates and it actually, they get it close. So that's all kind of baked in. So the problem is now we're digging deeper to see what's really going on, all the little metrics along the way. And it's causing the S&P to have to rebalance as well because it's totally changing how things are going there. We talked about that last week. So in short, yeah, they do affect the earnings there. It's a little bit of trickery, financial engineering, as they say. Nothing wrong with it. MU at 27, good buyer, wait to a downward trajectory. 27? 20, if you could buy it at, why not? It's at 43 though. I think maybe you typed the wrong symbol there. Looked at this one today. If you wanted to sell some puts on it, a little spike up in volatility, that was pretty good. And we'll do Cisco and MO. Thoughts of loading up shares? No, I don't know. So Cisco is not like a load up the boat kind of moment for a long-term investor. Why? Like, give me something. What do we have? Do we have the promise of better earnings? Do we have the promise of better cash flow? Do we have the promise of a little bit of a technical low here? Nope. So that's a tough one. I would say no, there's no reason there. Now, Altria, on the other hand, you got a discount. You're probably within a range of the bottom here. I wouldn't call it load up the boat with all the sort of headlines and everything, but at least you got a better discount and you're probably a little bit better off there. I saw Tapestry break above the range. Almost. It didn't break above the range totally, but yeah, that was nice. I saw that one today. I'd say nothing but good things about Tapestry today. Yep. You sold some MU $27 puts. I still don't get it. You did this before. You type it funny. I don't get what you're typing there. And if you're going to bring up options, you got to give me the expiration too. No, there's no 27. You can sell 20, I don't know. Wait a minute. Nope. Sorry, I wish I could help you there. No. So the question is, do you think it's Alibaba or any of the Chinese stocks? Do you think that this represents a discount today? You never make a decision after one bad day, right? When a stock gets punched in the face or has one really good day, for me, you never make a decision then to either get in or get out. That's just my personal opinion, because you have so much action, so much built up energy all in one day. The only reason it stopped is because the market's closed, right? So day by day, we're not really changing people's mindset. Now, there could be news or something that causes things to change there, but nope, I would never be a guy to say, one great day move, everybody jump in. I don't like it. All right, that's all I got for you. I'm going to wrap it up here and do my thing. Hope you have a great weekend. Congratulations to Mr. Ron winning our Guess the Dow. If you want to take a guess, go ahead and do it. If I helped you in some way, hit the subscribe button. I appreciate it. Thanks for all your support, and enjoy your weekend. See you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.